given the substantial treasury bills maturity profile of 1.2 trillion naira coming in the remaining weeks of the year and the thin supply of securities, traders at UBA say they expect Nigeria's fixed income and FX markets to trade in a low yield environment with fewer activities. Ifeoma Onyejekwe, a fixed income dealer at UBA, joins me for more on the market. Ifeoma, let's first assess the market performance in the midweek and what we can expect going forward.
Hi, Kenneth. Thank you for having me. So the treasury bills market this week has taken a bearish stance, beginning on Monday on the back of system-wide CRR debits carried out by the central bank last week Friday, which created funding needs among market players. And though the industry received almost maturity payments to the tune of 294.12 billion naira yesterday, the secondary market was observed to trade in one direction only, with bearish sentiments focusing largely on mid to longer tenor bills, ranging from 0.3% levels to 0.5% levels. An observation in today's trading session has been one of general calmness as market participants place their focus on the NCBO's primary market auction taking place today, where aggressive bids were noticed, particularly from pension fund administrators and retail investors, as only 50.90 billion naira was on offer. And on the bond side, although mixed sentiments have been observed during this trading week, the market has experienced more sell-offs in the few trades that took place this week, which can be attributed to decline in investor demand due to the, like you said, current low yield environment. The most actively traded bonds this week were the 2028, 2029, 2049, and 2050 bonds, which closed at 4.5% levels for the 2028 and 2029 bonds, and 7.3% levels for the 2049 and 2050 bonds. Some traders have also attributed the drop in demand for bonds to market reactions to the special automobiles as announced by the CBN in the circular last week. And while CBN announced features of the bill in that circular, the market awaits further information from the central bank on the supply of those particular special bills. And outlook in the T-bill space in the coming weeks is for mixed reactions because although, like you said, there is a substantial treasury bills maturity profile of about 1.2 trillion naira coming into the system in the remaining weeks of December. In addition to a thinning supply of treasury bills, we expect traders to promptly tie up their loose funds, especially in short tenor bills. However, we're also likely to see profit takers in the market as other investors consolidate their gains for this year. And on the bond side, the DMO recently released the last bond offer circular for the year, which has an offer 30 billion naira each of 2025, 2035, and 2045 bonds. And in order to prevent idle funds on their books, we expect investors to show us a mass for the bond auction next week Wednesday, exerting increased downward pressure on bond yields.
All right, but let's look at today's Treasury bills primary market auction and look at expectations we can get and how it will compare with previous weeks.
Well, we expect the results to be released at the close of business hours today, but we saw aggressive news in the auction. Our forecast for the top rate at the auction is for the long tenor bills to close around 0.1% levels from 0.15% levels at the last auction. So yes, we are all ecstatic waiting for the CBN to release the top rates at the close of business today.
All right, now, but looking at your outlook for the rest of the week, interesting times we're seeing with those special automobiles, but when we get those directions, what kind of impact do you think it will have in the markets going forward?
For a start, more liquidity, because those special automobiles, they will be on the back of the CRR funds that have been held by the central bank. And yes, the central bank has announced features of the bill as zero coupon bills, and it's going to be tradable among retail investors as well as banks and other financial institutions. So we expect the market to move to be more active as soon as those bills are released compared to the current actions now. As we know, the low yield environment has been one of has been very depressing in that it has moved investors away from fixed income markets to the equity space and more to the bond side rather than the treasury bills side. But as soon as the special automobiles are released, we expect to see more action and more activity in the treasury bills market.